SoFi seems to be getting curb stomped by the shorts for the past month, and just recently, new short interest data has been released for the first half of April, up by 9.2%. It seems like the shorts have been working overtime to crush SoFi. Many investors are freaking out right now, and some have even gone as far as saying SoFi will go bankrupt, and it's all downhill from here. Is it finally time to throw in the towel and call our mommies? At the time of writing this, we're still knee-deep in the trenches with a multiple 5-figure loss at the moment. You may be thinking, Wealth Gambit, why do you keep dropping SoFi videos with a depressing 5-figure loss? Well, for one, we love the SoFi community, and we're glad to be able to share our due diligence, or doo-doo, with you Sofian soldiers and trench warriors. And two, we like the stock. As we've stated in over 100 SoFi videos, SoFi's potential is massive. We think it could even become the Amazon or Tesla of the fintech industry. Someone even asked us this. But you might be wondering, with this price so close to being a penny stock, will SoFi run out of cash and assets before it has the ability to fulfill its potential? A lot of you have been asking us if SoFi has enough cash in the bank.
Let's find out!
While the market decides the stock price, digging deeper into the fundamentals may be the key to understanding what lies ahead of a company. Rumors are being spread around that SoFi will go bankrupt, but is this even possible? Bankruptcy is a company's worst nightmare. Going bankrupt means going to $0 a share, so this is the worst case scenario. Make sure to watch until the end, this is key. Before we crack right into it, we are not financial advisors and this is not financial advice, so always do your own due diligence. Before anything else, we'd like to give you a picture of what bankruptcy looks like. Take it from General Motors, who dug its own grave for the second time when it almost closed the deal with Trevor, the snake oil salesman Milton. Good thing it burned its bridge sooner. Now, what really happened to General Motors? In 2009, GM filed for bankruptcy in New York with $82 billion in assets and $173 billion in liabilities. I might have not done too well in Spanish class in high school, but I do know for a fact this is no bueno. It was the largest industrial bankruptcy ever recorded in history, so the logic is a company earns income when revenue exceeds expenses, and if it's a loss, it's the other way around and the expenses are much higher than the revenue it earns. But in the case of bankruptcy, if you know a company that over many years has skyrocketing liabilities, aka debts, more than the asset it generates like cash, this is our advice to you. But other than that, what made the century-old company lose the battle in the automotive industry? For one simple reason, GM stopped making money and just piled up huge losses. GM was taking L after L, and not only that, people weren't really liking the cars they produced at the time. Their large dealer network combined with their slow innovation led to its downfall at the time. Investopedia lists down the top 3 signs to look at if a company is going somewhere near bankruptcy. Number 1, dwindling cash or losses. Whether a company is burning cash for no reason or investing in its future, a company's cash flow might be the place to look if you want to know more about the whereabouts of their cash. Number 2, interest payments. Some of the questions you might want to check out is, does this company have enough earnings to pay interest on its debts? A typical financial ratio to look at is the interest coverage ratio, where a 1.5 mark is good for the analyst. Another ratio is called the current ratio, which shows you how stable a company is when it comes to paying its short-term debt obligations. Usually, a current ratio of more than 1 says that it's more than capable of paying off debts compared to less than 1. Number 3, big insider selling. Investors buy for one and one reason only. It means that they think the price will go up, and that's typically what happens if you've got a good growth company like SoFi. The reason why its institutional holdings increase over time. Last time we checked with SoFi, institutions and executives are not only holding, they're increasing their position. If you've seen our previous videos on why SoFi will never reach zero, comment down, long live SoFi. SoFi continues to be a growth company that hasn't earned positive profit just yet. Just before the first quarter earnings call of this year, we all know that SoFi invested a lot of cash for the birth of SoFi Bank, which led to a staggering amount of a $484 million net loss in 2021. Compared to 2020, it's about a 116% increase. We may have turned adjusted EBITDA last 2021, but it's important that we know SoFi still hasn't generated positive profit yet. SoFi is moving around with about $9.2 billion in assets and $4.5 billion in liabilities. If you hate doing the math, you'll simply see how assets are exceeding the liabilities, and it's less than half of the assets in total. unlike General Motors, which was almost on its way to its deathbed in 2009. If we dig a little deeper into these fundamentals, we'd see how the current ratio tells you that SoFi is in such a solid position to cover all its debts and other short-term obligations, given a 22.93 ratio that falls above the acceptable current ratio of 1. Let's take General Motors as the big lesson here. Being unable to adapt to the changing times puts you in a very disadvantageous position in the market where investors face uncertainty, thinking if a company can still be profitable or not. But with SoFi, the negative cash flows may be a waving red flag, but take a little time to look at where the cash is going. It's for a continuous disruption of the industry in the long run. Captain Noto and the SoFi gang is thinking how we here at Wealth Gambit invest, and that is long term. To all those shorting SoFi, I guess only time will tell who will come out victorious, but our bet is on SoFi. At this rate, SoFi is so far from reaching bankruptcy. As it gathers enough growth with members and revenues, we're not too worried on our end. If you watched this far into the video and you think SoFi won't go bankrupt, comment SoFi is not going bankrupt down below. Shout out to the people who cry and hold SoFi with us in the trenches. Also, a special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. We'll do our absolute best to provide the most value possible. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelf, Kevin Beaufrand, and J-Bone. We really appreciate all of your support. That wraps it up for today's video, guys. Do you think SoFi will ever go bankrupt, or will we be the ones to go bankrupt because of buying more SoFi? If you found any value whatsoever in this video, smash that like button for the YouTube algorithm and subscribe if you haven't already. Until next time, peace.